Markets will continue to rally even if the Federal Reserve chooses not to cut interest rates this year, according to Steven Blitz, chief U.S. economist at TS Lombard. His comments come as investors await the release of further U.S. economic data and closely monitor clues from Fed officials about the expected number of interest rate cuts in 2024. Last week, the U.S. Central Bank left interest rates unchanged for the fifth consecutive time, in line with expectations, keeping its benchmark overnight borrowing rate in a range between 5.25% - 5.5%. The Fed also said at the time that it still expects 3/4 percentage point cuts by the end of the year. The message fueled a market rally in the U.S. and overseas, with benchmark indexes climbing to fresh record highs since. Asked on Thursday about the likelihood of one or no Fed interest rate cuts this year, Blitz said that it's getting pretty good. You know that 0.4% month-over-month is a high number, and you know they are looking at that. They're not just looking at year-over-year. Really what is going on here is an evolution, right? Blitz told CNBC's Squawk Box Europe on Thursday. The Fed, have already told you they are not going to hike rates to try to shorten that timeline of getting to 2%. So if you're the market you're like, well that's okay, Blitz said. The key is, let the markets figure that out, rather than the Fed imposing that view. Let everybody evolve to that position slowly, and then all's okay. Traders are currently pricing in a roughly 55% chance of a first Fed rate cut in June, according to the CME FedWatch Tool. That's down from nearly 70% last week. Blitz said markets will likely continue to march higher, even if the Fed decides not to impose any interest rate cuts this year, a prospect that U.S. asset manager Vanguard named as their base case scenario. It's a very big, diverse economy and it's a very big country. So, you never have all geographic regions and every industry in every corner of the country doing well. There are always leaders, and laggards. It's just the nature of the beast, right? Blitz said. The equity investor's job is to pick out what's doing better, where the value is, but as an economist stepping back, you say no, there is no reason for the equity market to go down. Fed Governor Christopher Waller on Wednesday said that there was no rush to cut the U.S. Central Bank's policy rate to normalize policy. Speaking at an Economic Club of New York gathering, Waller cited recent inflation data, which tells me that it is prudent to hold this rate at its current restrictive stance perhaps for longer than previously thought to help keep inflation on a sustainable trajectory toward 2%. Separately, Atlanta Federal Reserve Bank President Raphael Bostic last week said that he now expects just one single quarter-point rate cut this year, down from the 2 cuts that he had previously projected.